since end of April and early May, India has actually been relaxing the lockdowns. What we've done is actually construct a weekly business resumption index based on mobility and weekly power demand data. What it's telling us really is that the activity, which had dropped from, let's say, about 100% in February down to about 45% in end of April, has in fact picked up as these lockdowns are being eased. So activity is now picked up to close to 70%. So you're still operating below about 30% below the peak capacity. But what we find very interesting is that since mid of June, the pace of business resumption is actually slowing down. So it's possible that the increase in virus cases we are seeing is causing consumers to be a bit more cautious. So it'll be interesting to see how mobility pans out. But net-net, there's been a pickup, but some slackening in the pace in the last fortnight.
And that's fascinating because I think the big question we're all asking ourselves is, what is demand ultimately going to look like when we come through the other side of this? Are consumers going to be willing to go back to life as we understood it before the virus, or will behaviour become much more cautious? Could you talk to us a little bit more about the aggregate demand vs aggregate supply equation in your index?
Yeah, absolutely. So, I mean, first of all, India is a services-driven economy. So, in a COVID-type situation, actually services-driven economies will be more impacted. So that's something that, one should remember. The supply side normalization, particularly, production of power, coal, cement, etc., has in fact picked up fairly rapidly. We are now operating at 70-80% of peak capacity already. The problem is, like you said, the consumers are still more apprehensive. So the demand side indicators, particularly on the services side, are still at 30-40% of peak capacity. So demand is weaker to catch up relative to supply, something that you saw in China as well. But I think, other than the consumer behavior, India, the share of the informal sector is very high. The policy support from the government has been fairly limited in comparison to the hit to economic activity. So there's potentially a permanent damage that's ongoing for the informal sector, particularly the SMEs. And a bigger challenge really is the banking sector, which entered the crisis with very high bad asset ratio. So there's also an impact on the medium-term growth. So if you put it all together, the big hit to growth, of course, is in the second quarter. Our expectation is growth will be down about 15% year over year. But the recovery back to trend will take at least another year. And for 2020 as a whole, we're looking at about minus 5% for India.
So now I want to thank you for bringing to my attention one of the best words in the English language. It's lackadaisical. And I mention this because in your report about what the rating agencies think about India, you mentioned the track record of lackadaisical fiscal consolidation, i.e. they did not fix the roof when times were better, when they had plus 5% growth as opposed to the negative 5% growth you're expecting year on year in 2021. The debt levels are picking up enormously. Huge concerns about not only the banking sector but also the shadow banking sector. This doesn't lay strong medium-term fundamentals, does it?
Well, it is sort of challenging from a medium-term perspective. As you said, in the current shock, the debt burden for the government has risen quite rapidly. Debt to GDP has moved up from 65-70% to an estimate of close to 85% in a year's time. So for the BBB minus rated countries, India has one of the highest deficit and debt to GDP ratio on the public side. Second, if the investment cycle and productivity gets hit, then the medium-term potential growth itself may come down, and therefore bringing down the debt burden when medium-term growth is slowing down becomes a bigger challenge. And third is the financial sector, the banking sector, NPAs, non-performing assets, the shadow banking issues. With the growth slowdown, what does this do to the asset quality cycle for the financial sector, which is again going to impinge on the medium-term growth outlook and will require a lot more support from the government as well. So all these three aspects are sort of combining in together and causing sort of a medium-term headwind for India, which is the reason why rating agencies have cut the outlook to negative, both Moody's and Fitch. And our judgment is that early 2021 is when rating agencies will take a call whether to downgrade India or not, which is at the last leg of the investment grade right now.